Hi, I'm Steve O'Hare and I'm presenting Trendlines on behalf of Fxview. Please take some time to read the risk warning and disclaimer. So in the webinar, we're going to cover drawing a trend line. We're going to cover tentative and valid trend lines, something which is pretty important when it comes to understanding trend lines. We're going to find out how we can use trend lines also. We'll look at the significance of different types of trend lines and also penetrations, and then follow off or finish off with role reversals when a trend line can reverse its role. So drawing a trend line, we've got a sterling yen chart here, and I've drawn this trend line on. As you can see, it's the top of the move, and price action has moved lower. And this we can start the trend line here, and for a trend line you need to connect at least 3 points. So 3 highs, 3 lows, or 3 significant levels. So there are different ways of drawing trend lines, but covering off the basics, we want to select at least 3 points, 3 touch points for a trend line to be valid. So if we start from here, we can see that the resistance was nearly touched here, but was definitely connected here. So this trend line was drawn through here and then moved on, and it connected or touched another 3 time frames. So this is a 4-hour chart. So we've had 1, 2, 3, 4, 5, 6 touch points on this trend line. So when it comes to price action now moving upwards towards here, we would expect this trend line to be a very strong trend line because it's had multiple touch points. Now also we could actually draw a horizontal trend line from this swing high here and this swing point here, and if that coincides with the trend line moving lower, then that will become even stronger. So we're getting trend lines backing up each other. So a tentative trend line is when you join 2 points on a trend line. So you have the market or the price action moves lower and we find a swing low in the market. Prices rally from the swing low and correct lower, but don't quite go below the previous swing low and then react higher from here. So there is a potential or a tentative trendline support. So what we would do, we could draw that in and maybe even draw a perforated line in, showing that is waiting for the 3rd touch to confirm that it is a valid trend line and a strong trend line. And this is a typical of a validated trend line, is when you get multiple touches, as we've seen in the Euro Yen chart. Price action reacts higher, and you can see as the prices are moving higher, buyers are trying to participate at higher levels after missing out on getting in or putting the positions on at the lower levels. So once the 3rd point is validated, that's the trend line, that becomes really strong, and then really every time it reverses or reverts back to this trend line, there is an opportunity to enter a good risk reward trade. So using trend lines as well, we could use them from not just in a trend fashion, actually trending up or trending down, but also when price action is moving sideways. We can find that there are horizontal trend lines can act as really good support and resistance. So price action moves lower, finds a swing low point, reacts higher off it, runs into resistance, and then retraces back down to the previous swing low. Now these are really, really influential and really strong support lines. So this is a horizontal support line or a horizontal trend line when price action is moving sideways. So when price moves back higher through the resistance, then that resistance can often become support at a later time. So trend support, we quite easily highlighted here. That's how you use them. It's as the price action is moving higher, you've drawn the trend in. So that is what's known as trend support. So how significant, or what is the significance of different trend line? So it's very important to think about the time frame. Trend lines on daily or weekly charts are far more significant to price action than the intraday charts. This is because they've been tested over a longer period of time. Also, as we've just discussed, how many times the price touches the trend line, backs it up and makes it stronger and stronger. So the more times a price hits that trend line, even if the price is moving higher or moving lower, it becomes stronger and stronger. So that's when you break down the trend line significance. What happens when we penetrate trend lines? It doesn't always follow through that when a trend line is broken, prices follow through. So it's really good to understand the market characteristics of whatever market you trade and think about what percentage of a break you've had. So you could look at maybe a typical percentage break, maybe 1/4% of the average range, or just actually 1/4% of the actual price of the asset. And if it breaks by a small percentage, then maybe it's insignificant. If it breaks by a bigger percentage, then obviously it is more significant, and there's more likelihood that prices will close below that trend line. Also, the time spent below a trend line. So if we, for instance, have a daily trend line and we have spent 3 or 4 days below a trend line, that's far more significant than if we've just spent a few hours below it. And also what we look at is also Friday's close. So these are more significant levels, more significant than maybe a daily close. You can have a move during the week where we spike through a trend line and the price action fails to move on and comes back below the trend line or above the trend line in an upward trending scenario. The close on a Friday is much more significant. That would be a daily close below, but also a weekly close below or above the trend line. So they're much more important timeframes to be looking for when it comes to trend line penetration. And as we pointed out, it's the role reversals. Similarly to how we had the horizontal trend lines, we can also see these role reversals occur in upward trending support or downward trending support lines. So price action moves higher, finally breaks, and it's a significant break, and it penetrates by a long way or over a longer time period. When prices try to break back above the resistance, which obviously the support line now becomes resistance, then that can be sometimes a good opportunity to fade that move. Thank you for your time. I hope you've enjoyed it.